In this video, traders, we're going to look at the question, does a choppy first hour indicate a choppy day? Stay tuned. Hey guys, a very warm welcome to you. Alright, so if you haven't subscribed to the channel, consider doing so for more videos from me on stuff like this, strategy, mindset, etc. and others too. Okay, so, and also appreciate all your support guys, those of you who are subscribed already. So, day trading, generally indices, not always so much, could be FX as well, depending on when you're kind of the first hour. Let's say you're separating it up into kind of, Asian session, US session, European session. But indices is where I'm coming from here, but like I say, we probably use it for most topics. So does a choppy first hour indicate a choppy day? So the reason we quite would like to know whether we're going to have a choppy day is, one, we might want to stay out of it. If it's too choppy, we don't get involved in it. Or two, more likely, we know we want to stay on the mean reversion side of trade. So in other words, we want to wait until highs are kind of breached and fade those, looking for a move back to a mean, whether that's a VWAP or a moving average, as opposed to trying to follow the trade and buy a breakout. And if it's a choppy kind of day, definitely mean reversion. If it's a trending day, we obviously don't want to do mean reversion. We're looking to buy pullbacks in the trend. So does the first hour indicate a choppy day? So normally we'd kind of look at the first hour of the day and go, right, the important thing is the metric is the range. How does the range of the first hour match up or relate to previous first hour ranges? If that's normal, then the chop doesn't matter so much. I think that's the more useful parameter is the range as opposed to what's happened during it, because it can lead to chop, and we'll get to that in a second. But if the range is good, and the range is kind of normal, then that's generally indicating that there's a bit of two-way trade there, just no side has really got full control of it yet. Supply and demand has kind of shifted, back and forth. So that's quite interesting. And bearing in mind, we can have situations where, imagine there's a key level here, or even a key level here, or both, and the market's really indecisive until that. So that key level could be on a higher time frame, and that's what people are waiting for, even perhaps day traders. Yourself as a day trader, if you are a day trader, that you may well mark on a chart and go, I don't want to get involved in this unless that level is breached, or I don't want to get involved in the market at all unless that level is breached. And so when you've got that situation, then you've got people just literally executing back and forth and nothing much happening. And so you might then have chop in the first hour, but then after that you still might have the chop until this level is breached, and then we can maybe start to come into a trend or a rejection, even a significant rejection. So very often, yes, chop can lead to a choppy day, but it's more really the range, and it's more really about the key levels that you've got that have come from your higher time frames. Because yes, even though we might not get a full clean break out of that, the fact that we fail on that and do the reverse might then bring in everyone else saying, hey, I wanted to see what the response was to this multi-day high, to this multi-day low. I see it's been rejected. Okay, right, now it's time to sell, and press the sell side, and then you might get a cleaner and crisper move. All right, so first hour of the day, does it indicate a choppiness? The other thing to look at is where we are opening in terms of a gap, okay? Because yes, I would suggest if we have gapped up nothing, let's say we gapped up a few points, that was the close, there's the open. Again, there's a bit of indecision, and you're probably going to get chop. You don't get a kind of big drive move, you're going to get chop. However, if you've gapped, let's say you gapped down significantly, that was the close there, let's say that was the prior close, you gapped down significantly, sometimes you're going to get chop anyway, just at the beginning of the day while people digest this move. Just saying, okay, we've gapped down a lot, where are we? And then after the first hour, things really start to kick into gear, because very often, hour maybe not so much, but very often institutions will wait until the first kind of 15-20 minutes is over before they start properly executing orders. Yes, there's a lot of move in the open, but liquidity is a little bit less, and so it can ruin their algos that are trying to time slice and VWAP slice or their orders throughout the day. So you can find that actually a trend starts to kick in afterwards. So if you've got a gap there, then chop is sometimes what happens. Very often you fill the gap, of course, and very often you have a continuation, but sometimes you have a chop before it kind of gets into its groove, and then you start to get some real liquidity and volume coming in. So you can, of course, then bracket your range and go, right, high, low, I'm only going to get involved after that. So impulsively, you say, well, if it's a choppy start, you think it's a choppy day, but don't rule out you know, that just being a precursor for a big move. Yes, when we've got quiet days, if volume's low, let's say it's before a holiday, or let's say we're in a rain, let's say nothing really exciting has happened, then you could probably surmise that we've got a choppy open, we're probably gonna have a choppy rest of the day. Or at least you could say, I don't wanna be trading any kind of breakout trade. I want to be looking for real extensions for mean reversion unless conditions change. So that's really my thoughts on it, guys. Okay, I've kind of answered the question, but I've gone on different tangents here. I feel that it does depend on other things like your higher time frame levels, your things like your gap as well. So you can't just use the fact that it's choppy, even though it's valuable under some conditions. All right, guys, good luck to all you day traders out there. Take care. Bye-bye.